All right, guys. So, welcome to another wonderful episode of our YouTube mentorship. And this video will be quite short, right? Because I don't want it to be lengthy because the topic is very straightforward, right? And the topic for today is one of my biggest secrets when trading the financial market. I learned from the ICT, and that was called SMT divergence, right? But SMT divergence has so many applications, right? It has so many applications, but for this particular teaching, I'll be focused on the EU-GU application, right? There's so many ways you can apply it, right? I focus on EU-GU divergence. So focus on EU and GU. That's what we focused on. EU, all right, GU divergence. So that's why we focused on GU divergence, right? So we focused on, right? So what does this imply? Right? So we focus on, right? Now, what am I talking about? Now, when we talk about SMT divergence, SMT stands for Smart Money Tool or Smart Money Technique, according to ICT, right? It says it's Smart Money Tool or Smart Money Technique, right? It's a very, very beautiful concept that if mastered, you can make a lot of money, right? A whole lot of money if you can understand this concept, right? Many smart money traders use this for their trading, and it's something that if you learn, you also make a lot of money from, right? You also make a lot of money from, right? So I will show you guys live examples of this. Yeah, I'll show you guys live example of trades I took with this concept, right? I'll show you guys live example of it. Right. So now when we talk about SMT divergence, we are referring to um a divergence from the norm, right? Like the name implies, a divergence simply refers to a deviation from the norm, right? It refers to a deviation from the norm. That's what it means. A deviation from the norm, right? So, um, give me a moment. Okay. So it means a deviation from the norm, right? That's what it means to diverge. If something is not okay, let's assume that two things are moving in, maybe we have two lines moving in the same let's say pattern, right? When you say this thing is divergent, simply means that the line now stop moving this way. Now, like one line goes this way, and then one line goes the other way, right? So, I mean, this was referred to as a divergence when the market is not moving in that symmetry. There's a break in the symmetry of the market, right? That is basically also referred to as SMT divergence, right? So now there are so many examples of this, and there are so many applications of SMT divergence. But for this particular teaching, we're talking about the EU-GU divergence, right? Now, you have to understand that EU and GU are correlating assets, right? EU and GU are what correlating. As correlating simply means that EU and GU tend to move in the same direction. That means when EU is going down and EU is making lower highs, if you check GU, right, GU is also doing what? Making what? Lower, so lower highs and lower lows. So EU and GU tend to move the same direction. If you look at the structure overall, sometimes EU is going down, GU is going down. When GU is going up, EU is going up. Most times they move in tandem. Right? So tandem simply means in alignment, right? So now, when a divergence step in, we are trying to say, okay, there is something when the market is not giving that symmetry, right? EU is now going one direction and G is going another direction. That was referred to as was divergence, right? So now let us look at the various types of divergence we have on EU. They're basically to have the bullish and the bearish divergence. It's very simple. Have the bullish and the bearish. So for the bearish example, for the bearish divergence, it simply refers to now. Let's assume that the market is bullish on, or let's say the market is giving us a bullish structure. Let us just use EU for the first example. Right now, let us take this off. So now, assume that the market is giving us a bullish movement, right? Or the market is kind of doing something like this. My market is maybe making lower highs, right? Right, right. Or let's use this other way, right? Let us use these patterns. The market is making higher lows and higher highs, right? The market is doing something like this, and the market makes a high, right? Now note that the market made a high on let's say this first pair is EU now, right? This is the first pair is Euro USD. So this EU now, right? So EU, right? That is the first example. So EU made what a higher high, right? And now you now look at GU, and GU now does something like this. You see GU does something like this. Let me take that out, begin again. I want you guys to get this thing. So GU now makes a high, right? Normal, then G does something like this. Now, note something. EU made a high, but what happened on GU? GU was made what? A lower high instead of a higher high. So you can see that it's now what? A crack in correlation. So what this simply means is that GU is heavy. It's finding it difficult to go up. So when GU is heavy, that simply means that you can anticipate some sells on GU. So always focus on the pair that is failing to make the high. That is for the bearish example. So now this GU. Now what it simply means is that what do? You do what you look for, you sell GU. That's what you do. You simply what you sell GU because what is giving was a sign of heaviness. Price on EU could make a high, but on GU it could not make a high. That simply means that you should sell GU, right? And of course, this is subject to top-down analysis, right? Remember, this is subject to higher time frame analysis, right? It's very important that you subject this to higher time analysis. Not that the market does not have any reason to sell on G and you're going to go and sell it. You're going to get clapped, right? So this is subject to higher time frame analysis. That means if you're going to be selling G, there has to be a reason why you're selling G, right? Now, examples I love is when maybe the market was overall downtrending, and the market was overall in a downtrend, and the market started retracing, right? And then you have this, maybe you have an order block here, right? Another block here, right? I have another block here. And then also the same thing happened on GU2. The market is overall bearish, right? And then the market starts retracing to that same order block, right? You have that same order block made an imbalance too. And now you now see this same order block form on GU, right? Maybe an order block is formed there. And then you now see that GU is failing to make a high. Now, what qualifies these sales that we have what an order block here? The market is bearish, like the overall trend is bearish. Then you saw this retracement. The market is overall bearish, right? The market is overall bearish, and the market now started retracing, right? And then on G, you now spot what a bearish divergence. That simply means that the market should continue going lower, right? So you can look for sales inside GBP USD, right? You can look for sales in GBP USD because what there's an SMT divergence which is bearish because price failed to make a new high, right? Now, another way to make your analysis to be very, very unique is that you can also look at DXY. You can also compare DXY to, if you want to do that, it's not always compulsory, but you can always do that. You can always compare DXY to make sure you're very, very correct. So in DXY now, remember that EU and GU are what? They move in the same direction. Meanwhile, DXY moves in the opposite direction. Now, let's get this. If DXY is moving in opposite direction, that means if DXY is making a high, that means what? EU should make a low. You understand? So understand this. Get the point. EU and GU move in the same direction, but DXY and EU move in opposite direction. That means if DXY is making a high, then GU should make what? A low, right? They go opposite. Now, another way to confirm your SMT divergence is when you're looking at this, you're not really sure this is divergence. Then not check DXY. Remember, if EU is making a high, what should DXY do? You should do what? You should make a comparable what? Low, right? I'll show you guys an example, don't worry. So if EU is making a high, that means DXY should do what? Should make what? Should do what? Should make what? A low, right? Remember I told you that it's opposite. So this is opposite of EU. So if this is making a high, then if EU is making a high, that means this should make a low because it's opposite, right? If this makes a high, make a low. This make a low, makes a high, right? It's opposite, right? So if you now notice that this has made a low, EU has made a high, that means GU should also make a high because GU is the opposite of DXY. So EU and GU are opposite of DXY, right? EU, GU are opposite of DXY. So now DXY has made a low, right? EU has made what? A high. That is what correlating. Okay. Now the fault is now what in GU because GU is supposed to make a high because DXY made a low and EU made a high. It's supposed to follow in the pattern. It's supposed to be opposite of DXY and descend with EU. GU is supposed to be opposite of DXY and descend with EU. But now GU is not making a high. Meanwhile, DXY has made a low, which should make it to make a high, and EU has made a high, we should make it to resemble that. So this was a fair of SMT divergence. So you can only look for what? Sell opportunities on what? On the GBP USD. I'll show you guys an example of trade I took. Don't worry, I'll show you guys an example. Don't worry, I'll show you an example of a trade I took. Right? I'll show you guys an example of a trade I took myself. Right, don't worry, I'll show you. Now, let's talk about the bullish example. Just get that. Let's talk about the bullish example. So for the bullish example now, for a bullish example, get the point. Just you guys should follow me. Oh, Jesus, this teaching is fire. So for a bullish example, right? When EU is making what? If EU is maybe making a low, right? EU is making a low. Right? This EU now, EU has made a low, right? You guys should get this thing, So EU has made a low, all right? And then notice that, okay, EU has made a low, okay, DXY now does what? DXY makes what? A high. So remember, DXY is the opposite. So DXY makes a high, right? DXY makes a high, right? Remember, it's opposite. So EU made a low, or let me just do it one way. All right, so EU made a low, DXY was made a high. Right, DXY made a high, right? That is what it's supposed to do. Right? That is what it's supposed to be happening that way because they're opposite, right? So DXY made a high, okay, no problem. That is opposite, it's okay. Now, you don't notice something that instead of GU to also make a low like EU now does what? EU makes what? Sorry, GPUS now makes what? You see GU do something like this. What happens there? GU has failed to make a low, right? This is what we refer to as an SMT. Remember what I told you, that DXY and EU are opposite, while GU and EU are the same. So now DXY has made a high, that means EU should make a low. And now you notice that GU did not make a low, right? GU did not make any low, right? So that simply means that there is bullishness in GU because GU is what? Weak, it cannot go down, right? Notice that there's a failure to make a low here. EU made a low, okay? EU made a low, right? EU made a low. And also now, notice that DSM made a high. So now, if this is happening, that means GBP is what? Bullish. So you are looking towards buy bullish, to buy EU. So if maybe the reverse happens, and maybe GU makes the low and EU does not make a low, that means what? EU is what? Bullish. So always focus on the pair that fails to make a high low. So your focus is on the pair, is on the failed high or low. So the focus on a pair that could not make a low or the pair that could not make a high. So it doesn't matter, it can be G or E, anyone, but the one that failed to make a low is the one you're focused on. So now let's look at a trade I took. Now let me show you I see the trade. So now look at the trade I took. Right, it was on my public Telegram channel. You can see the trade. You can be able to see it now. So you can see the trade. You can see when I enter the trade. I was easy to explain. I'll go to chat and explain it. So now this is the example of trade I took. Right, look at the trade I took. You can see when I enter the trade, you can see I actually took the trade. This is my I don't know day funded. I can't pronounce it. This is my day funded account. You can see the timestamp 1350. You can see the screenshots. This is when I enter the trade. You can see time 1350. That's 150. Now what happened next? So when the market started moving, this was 216. The market started moving to my TP. What did I do? I went break even, right? Now what happened again? There was a news release. Market ran to my TP and it was amazing. So I want to use this setup to explain the trade I took. It was around 2:30, right? You can see the time. You can see everything. When I was in the trade, you can see how the timestamp, everything is documented. That means I actually took this trade, right? I actually took this particular trade, right? So let's go back to the chart now. Since you guys can believe I took the trade, because some people can claim they took trades that they did not take. So sorry, I had to cover the losses because I don't like to talk about numbers. I don't show how much I made. I'm not into that, right? I don't talk about this how much I made. I don't show numbers, right? I only show you what you can benefit from, right? You don't benefit from people's numbers because the money is not your own, right? So focus on learning the lesson and don't focus on another person's pocket, right? So let's talk about, so now let's go to the left examples to understand this whole point. And don't forget that this is subject to higher time frame analysis. Remember, you don't just treat an SNC division like that. It's sort of what higher time frame analysis. Don't forget, it's subject to top-down analysis, right? It's not, don't just go and trade randomly. So now let's look at that trade I took. Let me just explain it again. Now let's go to EU. Let's go to EU so you guys can understand it. Let's go to EU so you can understand that. So it's on the euro dollar. So on the 5 minutes time frame, let us quickly open it. So on the five, I won't talk about the higher time analysis because of time. So I won't go to details of top analysis, right? So to take a lot of my time. So by 216 or so 150. So let me just quickly look for the trade. Actually, by around 8 New York time. So it's a 5 minutes time frame. Let's go to 5 minutes where I took the trade. It's a 5 minutes. Okay, this is the trade I've seen. I can see it here. So now, for some reasons, I was bullish, right? Why was I bullish on EU? I think this is the reason I was bullish. Because why? Let's look at the chart very carefully. Number one, we're at the discount level. I can see very carefully that um this is the reason I was kind of bearish. Because that there was market took out the low of the previous day, and I had the reasons to believe the market was bullish because we had this other block here, and we already took out we kind of took out this liquidity a bit. So we're actually at the discount level. So if you look at my FIB 2 very carefully, you can see that we're at the discount level. We're at the lower 50%, right? So we're actually at the discount level, which is favorable for buy. And what happened? I can see that the previous candles have been bullish. You can see 1, 2, 3. So 3 days have been bullish. That means most likely we see bullishness on this. So I don't want to go too much deep on that analysis because it's taking a lot of time to explain. So now this is the trade that I took. Now, the more I told you guys, right? Now there's a 5,000 naira giveaway, and this is the rules to win the giveaway. My name just give the rules for giveaway. So to win the 5,000 naira giveaway, right? You have to do these two things. Number one, look for an SMT. This is what you're going to do to win the giveaway. Very simple. Look for an SMT bearish setup from past charts. So you have to show me where EU and GU gave an SMT bearish setup from past chart. The first person to do it will win the giveaway, right? So the 5 for the 5,000 naira giveaway. So this is what you have to do. After I explain this, you have to go to your chart and look for a bearish example of this and send to my DM. So number one, look for the example, right? Take a screenshot and send to my DM. So take a screenshot. Send to my DM. So take a screenshot and send to my DM. Right. So look for a bearish example. Remember, take a screenshot and send to my DM. So I'll keep it at the side. So now let's go back to the example that we're talking about. So now look at this chart very carefully. Let's compare. Click on compare. So click on compare here. Compare with GBP USD. So new pen. You see it there. So now this is my GBP USD chart below. Right. I wish okay. Let me see how to do it. Let me undo that. I want this thing to be visible. I want this thing to be visible. Give me a moment. Let me use the way that it will be. Let me okay. So this is the chart. I'm trying to get it to be a candlestick. Settings. All right. So this is what I have to do. So candlesticks. So you can see it's candles. Now this is it. Now watch. Look carefully. At this point here, we had what? If the market make a low, no, market did not make a low inside this point here. Right? There was no low here. There was no low inside there. Right? Look at that. There was no low there. Right. Now look at let's put a line in between. So let's start the line here. So you get it. So from somewhere around here. So this is the whole point. Now there was no low here, but look at GBP which is down. So GBP is the one that is down. Look at GBP. Can you see the market made a low there? Can you see it? There was a low. So can you see that this is what I'm referring to? There was a low here, and there was not low on EU. So that was why I bought because of this essence divergence. And then I had structural reasons. Apart from that, I had liquidity here. So this liquidity I marked in my chart. So I had liquidity resting here. So I saw this liquidity there, and then that was part of why I was looking. And then if you look very carefully, price took out Asian lows already. So let's put my Asian low too. So you can see that market was giving me bullish. So you can see that this was my Asian range. Market ran below Asian range and gave me this essence divergence. So this was why I was bearish. Markets has taken out the Asian low and then giving me this inside my Q zone window. So I'm not going to talk much about Q zones and all those things because it will take a lot of time. So you can join my paid mentorship to learn all those things in details. So that was it. So I saw this setup. This was the SMT Divergence. I had a confirmation here, which I won't discuss because it's something that I've discussed in the private mentorship. So if you want to learn more about the confirmation I had here, just use the link to join the paid mentorship. Yeah, I discussed it in details, right? So that's just it. So that's it. So I had that confirmation here, right? Kind of demand zone here. You can see it. So that was why I bought. So you can see that EU did not make a low. Why DSI made a low? We made what a low. So that was my SMT bullish setup for a buy. All right. So that is basically I'll be wrapping up this call. Let us just quickly compare DXY. So we have seen EU. Let us quickly compare DXY. Let us quickly compare DXY and see that if something was there. So where's DXY? Let's do a new pane too. All right. So new pane DXY as well. Let's see that same place. All right. That same place. That same point. All right. So let me just quickly cancel that so I can get it. So okay. My God, this is not allowing me to change it. Okay. So that's it. I want to get the candles. All right. So you can see DSI made what? So you can see very nicely. You can see that that was it. So somewhere around there, EU failed to make it a low. Why DSY also failed to make a high. So the main divergence was between EU and GU, right? And then it has bullish confirmations to buy, right? I don't want to touch more into this because DSY is going to confuse you a lot, right? So just follow the examples I gave, right? So this is for the giveaway. Look for an SMT bearish. So I give you guys for bullish. Go to your chart and look for an SMT bullish divergence between EU and GU, right? And then take a screenshot and send to my DM, right? So that's how to win it. The first person to do that is going to get the giveaway, right? So that is basically the end of this video. So if you want to win the giveaway, just simply do this. Look on your chart. Look for this example, a bearish one. What do I mean? I mean that EU will make a high, and then GU will not make a high, or the reverse. Right, this is what I'm referring to. So EU make a high, GU doesn't make a, or GU makes a high, EU doesn't make a high, and then it drops off. So look for when the market did not make a high, when the dollar made a high, and then it dropped off, right? So that is basically what this video is all about, right? So if you want to win the money, just use these steps to do it. The first to do it correctly, right? The first to do it correctly, you win the giveaway, right? So you can just don't go and rush. If you rush and you don't win it, that's up to you. But if you do it nicely, you're going to win the giveaway, right? So see you guys in the next video. If you want to join my paid mentorship, use the link in the description, and I will see you guys in the paid group. Have a wonderful day.